Hello and welcome to Markets Mantra, your weekly dose of corporate action, market action for the week gone by and for the coming weekend. We're coming to you from Olive Mahalakshmi, indeed a place to unwind, especially on Friday evenings. Stock markets are all about wealth creation, and today we've got two very special guests. Yes, indeed, this is a very special edition of Markets Mantra because my two guests on this show are two wise men on the street with over 2 decades of market experience. 18 is when they both touch the stock market ring. We'll talk about their stock ideas, market outlook, and their Sensex target for next 12 months. But right now, first tell you what's lined up on this edition of Markets Mantra. But of course, we'll talk about Nifty, 3 stocks for Monday morning, and important cues for next week. But now, let me really pull the rabbit out of the hat. Vijay Kedia, my first guest on the show today, his claim to fame. In 1998-99, he identified a stock called VisualSoft, now known as Leading Edge, at sub 100. And then he sold it at 2000 plus. 2005, TRF, which he identified at sub 100, sold at 2200 for a Daiichi Logistics, and it's a long list. Who is Vijay Kedia, the man? Let's watch him.
110 years later, he is the third generation in his family to make the stock markets his playground. Vijay Kedia is just 49 years old, but he spent 31 of those investing in stocks. When he was just 18, he joined his grandfather as a trader on the Calcutta Stock Exchange. And even though he won't say how much he's worth, he admits he made his first million in 1990 trading in cement giant ACC. Vijay follows a simple dictum that markets are always a slave to earnings, and he is a slave to the markets.
तेरे ही सपने लेकर के सोया, तेरी ही यादों में जागा.
In fact, he wears his philosophy on his sleeve, literally.
My other guest in the show today is the director of antique stock broking, Kedia. Kedia identified stocks like BEML, BEL at sub 100, and these stocks we know then they made history in 2007-2008 when both of them actually went above 2,000 rupees. He also identified the infrastructure space in a public conference in 2004 when since Kedia was a stockbroker, he was open about it and he was advising his clients to buy IVRCL, Nagarjuna, and then these stocks of course multiplied 50 times, 60 times, even 100 times. And in February 2009, which is current year, he was the only man on the street, only wise man on the street who predicted a market of 15,000 plus in the year 2009 itself. Let's see the man and really the lighter side of Kedia.
Kedia is a man who lives a double life, a low-profile personal one and an aggressive stock market presence. 50-year-old Kedia has 30 years of stock market experience. At 18 years of age, Kedia walked in amazement and fright into the PSE ring with his uncle. Now owns a stockbroking firm. Kedia stays ahead of the curve. Infrastructure is an example. He earned his stripes with ACC in early 1990.
Then the market price was around 300 rupees and it moved up in 2 years to almost 10,000 rupees.
This bull has 2 simple rules. Rule number 1, never lose money in the markets. And rule number 2, never forget rule number 1.
Like you said, the show is not really all about what you should expect next week. It's all about two very special wise men. Let me now introduce both my guests on Markets Mantra. Like I told you, we're coming live to you from Olives. Vijay Kedia, good to have you on ET Now. Thank you for joining us. KPI, lovely to have you. And just for record, this is the first time both my guests have come on television, so they're extremely media shy, but they're kind enough to share their wisdom with us. Okay, Vijay, let's get it started. It will be more comfortable actually. It's a nice way to really spend Friday evening. There you go. I'm comfortable. Let's shoot now.
Yeah.
Okay. How do you assess the market right now?
I think market is cheap. There is still value left in this market and a lot of opportunity, money to be made.
You got to say that loudly, I guess.
Lot of opportunity in this market to make money. This is what I mean to say.
Okay. Kedia, what's your assessment? Where do you stand? We've seen both the cycles in 2009. First distorted price levels and then one would say, shade of euphoria?
I think current level, if you ask me for next 3 months, we may be range bound between this 48 and 51.50. But once by January end quarters, and then after, there will be a new trend which may emerge, and that can take.
Are we in a earnings-driven market, or are we in a market where it's pure money, which is the magical word?
If you are asking this question to me at this moment, maybe the liquidity, which is the magical word, which is driving the market. But within the 2 months, 3 months, this euphoria may get a little bit cool down, and then after people will start top down from top down approach to the bottom up approach, and they will start selecting their own investment ideas, and again the market will have a smooth and little longer period of consolidation. After that, we will have a good long-term move.
Vijay, coming on that one, are we in an earnings-driven market, or are we in a pure momentum-oriented market? There's no problem in a momentum-oriented market, but where are we?
I think everything combined. You can say that liquidity-driven market, and you can say people are left out. That is the biggest thing, I think, which can boost this market further, because people are still left out. People are not leveraged, they are shy, and that is one thing which can take this market further high. I don't know, I can't guess the index in 3 months or 2 months or 4 months, may go to 20,000, 21,000, even lie here also. But I think people are left out. That is one good thing about this market, that this market is not overbought.
You have two sides. One, director of institutional brokerage firm, a large institutional brokerage firm, and then the investor side. So what is the businessman in you indicating, and what is the investor in your thinking?
Businessman, I think at this level one has to be cautious. There is too much liquidity which is driving up to the market, so one has to select their ideas and give little bit of time to select your new investment, and just wait for some more time. You may get an opportunity either in the price or maybe in the time.
So you think corrections are not going to be sharp, they would be swift, and they would again re-lever very strongly?
Yeah, there may be there may be a stock selection process which may, for another 2 months, I believe that market will not run up anymore.
Vijay, your assessment, this market, how would you characterize it? Do you think the market is seeking for a correction? Nobody wants a correction if you're a bull, and I know you've got a bit tattoo there, but does the market, is the market really seeking a correction?
I don't think so. Market wants to correct, but it's not correcting. No, every 200 points of fall is coming with lot of money. What I feel like people are saying, this market is expensive. Let me tell you one thing. In my view, as long as we are expensive, we are hot. Okay, now India is becoming a brand. It is no more a emerging market. It is okay, emerging market, but India is becoming a brand. So if you want to buy a Versace, you're going to pay for it. No, so this is what you are paying a premium for this market. To get into the Indian stocks, you have to pay a premium. This is what is happening.
Correct. Gentlemen, stay with us. A break on markets. So when we come back, yes, we will talk stocks.
Stories and keep you on the inside track.
Business First maps out India Inc.'s agenda in a globalizing world.
Analysis, trends, debates.
The sharpest views from the biggest voices, along with ET's discerning grasp of the business pulse.
Access first-hand information right from the source.
Get the inside picture on Business First.
Only on ET Now. As Diwali 2009 delivered, this week Brand Equity takes a look across verticals and finds out if the festive season brought back cheer. All that and more only on Brand Equity, at these times only on ET Now. This week on Zig Wheels, we take you on a joyride of a different kind. With Raid de Himalaya, a spectacular surreal experience, extensive, intense and grueling. See the hills like never before on this special episode of Zig Wheels.
The top 10 stories for the captains of the industry, the decision makers of India Inc.
News that is presented with perspective and insight.
Presenting Top 10 at 10.
A capsule of every
everything you need to know, from business to markets and politics to entertainment. Headlines that matter only on Top 10 of 10. Big news, bigger impact.
We want to invest in industries, companies that are growing very fast because we want to take part of the growth capital that is needed. So when an opportunity came around during the crisis to pick up something at very distressed prices, we go. It's based on overall understanding but very specific to the opportunity.
Catch Rajat Gupta on ET Encounter, only on ET Now.
Welcome back. You're watching Markets Mantra on ET Now, and yes, indeed, this is a very special edition of Markets Mantra. We've already introduced both our market wise men, Vijay Kedia and UT Doshi. But right now, let's look at something you cannot ignore. Nifty is struggling to cross 5100, but it is also finding support closer to 5,000. There are now important cues for next week.
Well, Nikunj, clearly as we've seen for the week gone by, Nifty was really struggling to maintain above that 5100 level. As we've seen, the past 4 days was completely lower tops and low bottoms, but today some amount of recovery is coming, but still a little bit of short build-up on the open interest front. 16 lakh shares added in the Nifty open interest, but one thing to take heart from is that the premium is still persistent. We're seeing a premium of almost 10 points to cash there, so good cues coming in from the premium front. In terms of technical analysis, well, the cues are still pointing towards an uptrend for the next week. An uptrend is still intact above 4900. Since we're maintaining above that level, we are still in an uptrend. Pivotal level of 5020 has been breached in today's trade, so Nifty, according to analysts, say that they can go right back down to 4750 levels. Apart from that, one more negative cue that has been coming in is the negative DMA crossover of the 5 and the 10-day moving averages. So clearly this is one sign which is showing some amount of weakness, and the weekly trend also, since we have shut shop below the 5100 mark, has turned downwards. But still coming forward into the next week, analysts do say that if we were to break the 4968 mark on the downside, then we can go right back to 4950 and 4900 levels, which again is a very, very crucial support level. In terms of the upside, if we take a bounce back from here, then 5050 to 5080 is the level to watch out for next week. Also on the option front, similar picture being painted. 5100 is the option strike that has been adding the maximum amount of open interest, so resistance at 5100, but a support clearly being placed at 4900 and the 5000, as those puts are clearly adding open interest. Nikunj.
All right, Devina, many thanks for that. Now, okay, let's talk stocks now, Kirti. Now, we know that you got an eagle's eye to identify stocks, and you've identified 50 baggers, 100 baggers, multi-baggers is what you like to identify. Let's start with your number one multi-bagger idea for next couple of years.
In the mid-cap segment?
Mid-cap.
I think one Sterling Holiday Resort.
Okay, so why do you like Sterling Holiday Resort?
If you see the company's market cap, it's hardly not more than 300 crore. Virtually a debt-free company. With the comparison with the another which is trading in the market, is trading around 3,000 crore market cap. They have more than 1,100 rooms, more than the another player in the market. And they are still large upside because they have more than the 7 different locations that they have extra exercise. So within 2 years, I believe they may go more than 2,500 rooms. And being a country like India, where the middle income group is growing, I'm sure that every people like to spend some large money on this vacations, holidays and all that. In India, you don't have any better choice besides these two companies. Sterling being the first identification of the resource, they are the best port in the country in most of the places. And now the new management has taken over the